You're watching Famous Dave on YouTube.
Hi, welcome back. We are seeing a volatility spike today with the VIX up 540 so far as the global markets sell off. Now, if you were to pull up most news sites, including Drudge Report, you would see, hi VC analyst, I have no position in UVXY right now. If you were to pull up Drudge Report or any other main news site, you would see that this sell-off is related to a big sell-off that happened in Chinese markets overnight. Obviously, there is a time difference, and thus markets over there are open way before ours are. Several real estate firms sold off big time. The one that's being mentioned a lot in the news is Evergrande, which is a very big firm. I guess it's ranked the 122nd in the world in real estate development. But there's another firm called Cynic Group that was down 87%. It's a smaller real estate firm, Cynic Holdings, and the stock was basically went from $4, it's Chinese dollars, but from Hong Kong dollars, but from $4 down to 50 cents. And this is, I guess maybe these are named with numbers, some of these stocks. So it's 2103 in HK, Cynic Group, down 87% today. And this leads us to an interesting discussion about sort of capitalism versus communism. And, it's not all... both our economy in the United States and the Chinese economy are they're mixed economies. It's we're not completely capitalist, and they're not completely communist. Both economies have aspects to them of the government, like a social contract. You could say socialistic things, like, for example, we pay taxes so that the police can patrol our streets, so that there's stoplights, et cetera, et cetera. The government is involved with the economy in certain ways. But in this case, the Chinese government is sort of cracking down on the ability of companies to borrow money. It has to do with debt. And thus, a lot of these Chinese firms, these property firms that owe a lot of money, have had to scale back on their borrowing and have had to have kind of a fire sale to liquidate some of their assets to pay off debt. I was looking at a particular article from Yahoo Finance here. Let me pull it up for you. And it was talking about how Evergrande Group needed to get funds because they're going to default on debt. Here's a Reuters story here. Chinese Evergrande shares dive to 11-year low as default risks grow. And the Chinese government is not making it easy for these guys. In fact, they're tightening up lending requirements. So Evergrande Group, number 3333 in the Hong Kong stock market, closed down 10%. It was down almost 19% at one point. And they have, I believe, 2 debt issues where they're about to default on debt. And why is this important to you? Well, this company has borrowed money from something like 121 different Chinese banks. And, as much as in the back of my mind, I think, oh, well, it's kind of great to see China struggle a little bit because, you feel this competitive nature, me being American, nationalism and all that. And, we want to be, the U.S. doesn't want to get knocked off its perch as the superpower of the world and all that. But the thing is that everything is interconnected in this day and age. And if something's bad for China, then it ends up being bad for us as well. And we're seeing that now with the E-minis down 72. Now they've been bouncing around a little bit. Let's take a look at the action in price action in the E-minis. And when we look at a chart here, backed up, no big deal, right? We've had a little bit of down, but if you look at a chart that's backed out like that, it doesn't seem like a big deal. However, we zoom in a little bit, we can see that we've been selling off now for, the trend, this downtrend has been going on since about let's see, the fourth, maybe the third, fourth, fifth. I guess there's a weekend in there somewhere. And we've seen volatility firming up. Now, a lot of times in UVXY, we say, it doesn't matter what the event is, just trade the numbers. However, it can be important to understand what's going on. A lot of times we'll get a vol pop when there's not really a quote-unquote reason for it in the markets. But here we do have a catalyst in this Chinese debt issue, and we had one of the biggest sell-offs and biggest VIX spikes of all time a few years back was due to issues with China. So we have to keep all of this in mind. I was thinking of coming on last night and talking about the VIX and UVXY. A lot, we had the market selling off Friday, and a lot of times what happens is that a weekend actually helps to that break for a couple of days from trading. It kind of snaps everybody out of the trend of going down, and you find the markets rallying into a Monday morning. And that happens fairly often. So somebody who was looking to initiate a short position in the VIX on Friday might have thought, well, this might be a good spot to kind of jump in here because stuff is slightly elevated. If we look at UVXY Friday, you can see the pop here. It's like, well, stuff is elevated. This might be a good time to jump in. But on a slightly rarer situation, certainly the situation has gotten worse since Friday. So we've got the VIX up to 25 and change. And once again, might be a decent spot to jump in here to the short side, depending on how this stuff works out. Now, the part of the debate with Evergrande, and there's another one, I believe it's called Henderson Holdings. Let me pull up my news story again. But part of what people are talking about is maybe the Chinese government bails these companies out because that would be ultimately the best move for them as far as overall for their economy. And, it's been a transition for China to become more sort of capitalist as the economy has grown in China. They have, they've opened it up more for foreign investment, and the companies become more capitalist. However, we do know just from watching, now I like to watch Serpi Tenza. I don't know if you guys are familiar with him, but he is a South African who lived in China for a long time, and he discusses what life sort of on the ground in China is like, and more now was like because he's left China as of, I believe, a year ago. But, as far as China's kind of like the Wild West compared with the U.S. as far as finance. The regulation is not so strict. The reporting is not always accurate as far as numbers, and so there's opportunity certainly there. Let me go to Yahoo Finance here. But the article I was reading here was talking about how there is a possibility that the Chinese government will bail out this company. Now, what trading opportunities does this present for us? I was looking up some ETFs that have to do with China. So I typed into my search China property ETF, and I came up with a couple names. one is FLCH. And then, let's see. This is one I haven't looked up. China Real Estate ETF. Let's see this one. And, is this an opportunity now to buy these real estate ETFs at a discount? Well, that's kind of a risky trade, certainly, to do that. New York, so CHIR. Let's look at that one. I have the computer in the other room, and I pull up all this stuff on that computer, and then I leave that in the other room. Anyway, so what's the play in UVXY? Well, if you had some sort of short position already in UVXY, the play is going to be, if you had some sort of bullseye position where you were short calls or call spreads, the play is just to hang out, and over time it will adjust. If you don't have a position on, it might be an opportunity to jump in at good prices to start a short here, but we never know. The situation could get worse, and we could move higher in the VIX. Now, generally, VIX spikes, the average spike only lasts like a day, but we had a situation a year ago where the spike lasted 6 months. So you never really know what's going to happen. Now, if we look here at the VIX term structure behind me, of course, the VIX term structure is going to show you the relationship between the different VIX futures, and here it is right here. And we can see that it's showing me ads, which is annoying. Yeah, see, this whole ad thing is like too much. I mean, this guy not only does he have like one ad, but this is just, it's 1,000 ads here, right? See if we can avoid this somehow. We can see here that the spot VIX price, which is this top line here, is above the prices of most futures. Now, that can't stay like that forever. The futures here are still in contango, and basically we have a whole month till expiration pretty much. So you can see here the contango number is very low, right? So right now, UVXY is not decaying very much at all. However, I mean, to put a short on, you would be anticipating that the VIX go back down right now because we are kind of in a spike. If we stay in this situation, I would anticipate these futures to, the contango number to flatten even more, and actually the futures to start to curl upwards towards the spot price. But, we've only been in this spike for a day or two. So usually the curve kind of stays intact and will move slowly over the next few days. So, better spot than in a while to put a short on in the VIX. However, the situation could continue. So it's a trading situation. There is a case to be made to be to get short here, and there's a case to be made to sit on the sidelines. I think it would be very risky to get long UVXY here. It could possibly work, but the most likely situation is that the markets do recover a little bit. Essentially, they'd have to keep going down at a similar rate to what stuff is going down now to maintain that VIX price. So I would be very cautious about getting long UVXY now. If you were long UVXY already, then congratulations. And if you were to get long UVXY, I would recommend holding that position for 48 hours or less, because if it doesn't work within that time, the odds become more and more against you to make money in a long position. So UVXY approaching 27. This could be a good time to jump into something. If we look at VXX, I tend to be more and more conservative with the way I trade these things. So VXX 2932. If I were going to jump in here, I would buy some sort of vertical spread, and I'd probably go out to November to give me time. If we look at a chart of VXX, we can see the low here of 2450. So I would make a play for it to get back around that number. So maybe buy the something like the 27.25 spread. So let's see prices. Now this is obviously prices before the spike, but 27.25 put spread most can be worth is $2. It's showing $1.25. We'll see kind of where that opens. Certainly with the volatility spike, we're not only going to see that this VXX and UVXY moved higher, but we will see options pricing expand because we know that there will be put buyers coming in today, and the market makers know that too. So prices for just straight out puts will expand as we move higher, and so it's kind of a sucker's bet to go into UVXY and just buy some puts, right? If you were to just say, oh, well, UVXY spikes, so I'll just buy some puts, and then when it goes back down, I'll sell them back out again. They are going to not make that easy for you because that's what market makers expect people to do. So they're going to raise the implied volatility of the options. And so you could pay a certain price for some puts, then and you could be right, and UVXY could go back down, but they're going to lower, as UVXY goes back down, they're going to lower the price of the puts because they know people would be coming back to sell them back out. So the best way to think about these things is think about the person on the other side of the trade from you and kind of what their thought process is when you're making these sort of decisions. That's why I prefer a vertical spread where you're buying one option and selling another, because that kind of takes off the table any rise or fall in options implied volatility, because when you're buying one option and selling another in the same month, they offset each other as far as volatility goes, and you're just looking at a risk reward. Okay, I'm betting $1 to make $2, etc. And you know whether the spread is I'm paying $8 and selling the other one at $7, or I'm paying $3 and selling the other one at $2. It's still $1 for the spread, right? So moves in option prices are not going to get in your way as much when you're dealing with vertical spreads. So we'll see what happens as the markets open here. Currently, E-minis down 77. So the position, let's talk about GME for a second. GameStop, I decided to put a less risky position on recently. And what I have on is out in November, I have a wide condor on. So I have I'm short the 260 to 280 call spread, and I'm short the 140, 120 put spread. So a very wide, far away from at the money strikes. And so it has me collecting $50 a day. Right now my delta is long 6. It worked beautifully the first couple days where my delta, basically it went back to where it started. GME is down in sympathy with the whole market selling off right now. It's indicated to open down, I believe, 7, at which point I would be long 6 deltas, still collecting my $50 a day. So that position will work out just fine today as far as things go so far. I still am bearish on GME long term, but my position doesn't reflect that right now. I have a somewhat neutral position, just which is basically just a bet that there's no extreme move in GME in the next 60 days. So we'll see what happens with that. If it does start to move in one direction or another, I can start to adjust. But for now, that position will work fine today. So we'll see what happens with the VIX. Once again, VIX up 5 and change. It'll be interesting to see what kind of options paper comes in today in VIX options. There's the VIX. The VVIX, of course, will not print until we have options trading going on. I anticipate VVIX to move up because we probably will see out of the money call buyers in the VIX on the open today. So that's kind of where we stand. I don't think it's a bad time to initiate some sort of short, in my opinion, for me, but I will not. I refuse to make recommendations for you because I don't know what your financial situation is, and that those are things that you have to decide for yourself. I am not a licensed financial planner, and if I were, I wouldn't just give advice to the general public over the internet. Because the reasons for that are many, but one of them is just I don't know what your financial situation is. Some people could bet, so let's say $10,000, and if they lost it, no big whoop, it's a bummer. Other people, it takes them 5 years to save up 10 grand, and a loss like that would be just devastating. And there's both kinds of people out there in the world, and certainly financial advice is going to be different depending on your situation. All right, so I've talked enough for now. We will see what happens as this Chinese debt situation continues to emerge. Let's take a quick look at Drudge Report before I leave you. Bitcoin, also Bitcoin down as well. Bitcoin, people had compared Bitcoin to gold, saying, well, it's a safety for your money if the dollar falls apart, or if there's a lot of volatility, Bitcoin will be a safe place for your money. But it's not acting that way at the moment, right? When the markets go down, Bitcoin goes down. So how is that different than owning stock in the way? You can make your own decisions about Bitcoin. I'm not a cryptocurrency channel, but I remain personally skeptical about owning Bitcoin. Anyways, I know many people who watch this have different opinions on me on that, and that is just fine. I encourage everybody to have your own opinion on things. Thanks for watching me today, and I will see you in the next one. Good morning, everybody. Let's see, just to look at this, at the comments here. There's always somebody who is calling the crash every day. And just be aware of that. Now, that doesn't mean that somebody is not right. Just speaking to Brenda Anthony. Michael Burry, of course, famous from the Big Short. There's someone calling for the crash every day. And once again, not to say that one of them is going to be right at some point, right? But just treat it with a grain of... basically, if you followed everyone's advice when they said that today is going to be the crash, you would be broke pretty quick. So generally, in my mind, the markets tend to rise slowly. And so my outlook is generally that the markets are going to rise slowly every day. Certainly, there are disruptive events, and the markets do crash from time to time. But I generally don't have the opinion that it's going to crash today, because that is not going to be a money maker most of the time. It would be great wouldn't it be awesome if someone give you the heads up like the day before the market crash? It's like if you had a time machine and you knew, or even if someone just said, Apple on October 2nd will be at X price. If you had that foresight in your head, just to know one stock price, and you could go and I've fantasized about that before. Okay, Apple is going to be 150 3 weeks from today. You could go and borrow as much money as you could and put this options position on that would profit the most from Apple being at that particular price. You could sell a straddle, the 150 straddle that expired that day. Wouldn't that be awesome? How would you craft a position if someone were to just give you one stock, let's say NEO, and you knew where it was going to be a month from now, and that was your one foresight that you had? How could you craft a position to make the most on that? All right. Anyway, the market's about to open. We have 16 minutes till the market opens. E-minis are firming up a little bit. I would not be surprised if the markets didn't firm up a little bit, coming into the day here today. remember, there's always money that needs to go into the markets, right? Many people have a certain portion of their pay that gets taken out, that gets put in the markets. There's always money on the sidelines that needs to go in. And so for the markets to continue to sell off, there has to be more people selling than that continuous flow of money in. So it's not that easy to get the markets to really sell off. Keep that in mind. We'll see what happens. UVXY, let's see. It looks like we're a little bit off the highs here. If we look on the daily, the high so far is 26.98. Looks like we could go back through the 26 strike here before the open, possibly. Best of luck to all you trading today, and I'll see you in the next one. Thanks for watching.
You're watching Famous Dave.